Hi, welcome to this video where I'll be giving an introduction to the geoscience and data sector. Geoscience and data companies use the subsurface mapping to do exactly that. They deploy teams of geologists equipped with advanced technology to capture high-resolution images deep underground. After processing this data, they generate precise 3D maps of the Earth's crust. And this isn't just about hunting for valuable resources like oil, gas, or minerals. This can also be for engineering critical safety projects. They can also ensure the ground is stable enough to support massive engineering projects like offshore wind farms. So, how it started? In the 80s and the 90s, the oil industry started externalizing some divisions to focus mainly in the production of oil. Before then, giants like Standard Oil were fully integrated. They handled everything from exploration to production under one roof. But then two things happened. First, seismic imaging technology advanced too fast for individual oil companies to keep up with those divisions profitably. And then that when oil prices crashed, massive exploration teams were usually the first ones to get laid off. And today, outsourcing this data makes perfectly financial sense for oil companies. Instead of carrying massive overhead, they only pay for the data and the processing when they are actively exploring, and it turns a fixed cost into a flexible project expense. Plus, it gives them instant access to top-tier, ultra-specialized experts without the burden of full-time salaries. Best of all, data has become cheaper as well, thanks to business models like the multi-client model, where data companies can sell the exact same geological maps to different buyers, spreading the cost and lowering the price for everyone. To understand this business, you have to understand its biggest risks. It is highly cyclical. Geoscience companies rely heavily on oil exploration for the primary revenue. This makes them entirely dependent on global oil prices. Every time oil prices plummet, oil giants cut their exploration budgets first, and as a result, geoscience firms face immediate financial bleeding from a sudden lack of demand. Other business like the data for wind offshore projects brings some stability to the revenue, but it is also a cyclical business itself, and it is a minority of the services from those companies. Investing in the sector comes with a unique challenge, primarily due to how these companies manage the most valuable asset, the data library, which is an intangible. Unlike traditional services business, geoscience firms don't usually work on demand. They speculate. They deploy capital upfront to map the surface, assuming 100% of the risk before a buyer even exists. This makes the true value of their data library incredibly difficult for retail investors to qualify. And furthermore, this asset is subject to heavy depreciations and amortizations. During a market downturn, when oil giants freeze exploration spendings, these fixed amortization charges do not disappear. They continue to bleed into the income statement, crushing profits margins, especially when the revenue is at its lowest. Beyond the data library, there is the physical and the infrastructure, which in this case is subsea vessels. Conducting geological surveys offshore requires an expensive fleet of highly advanced ships, often costing around $40 million per vessel. To avoid tying up too much capital, many of those firms outsource or lease those fleets. However, this strategy doesn't completely erase the financial risk. Lease payments still show up in the income statement. Whether owned or chartered, maintaining access to the specialized boats creates a high cost base that is difficult to manage during industry downturns. If you are more interested in the subsea vessels, I made a video of this sector in my channel. And with all this being said, thanks for watching and see you in future videos.